The big six banks in Canada are going to announce their earnings this week starting from tomorrow, and then we'll go into Wednesday as well. While a lot of eyes are on their profitability because there is a fear of the exposure into the commercial real estate fiasco, which is happening pretty much across the globe, but more heavily in the US. And if you're not aware of that crisis, basically what happened is the commercial real estate, especially the office buildings, the commercial retail plaza, but multifamily homes as well, they are typically financed on a short-term basis, let's say 2 years. So the landlords who have financed these buildings 2 years ago, they might have got the interest rate sub 3%. Now, if they're going to renew or roll over that debt, the interest rate that they're getting is more than 7%, sometimes 8, sometimes 9%, depending upon the lender and the terms that they are going to sign between them. So when you see that the debt servicing cost goes quadruple, then of course the valuation gets severely impacted. On top of that, we saw a massive change in terms of the way people work now, right? So this whole hybrid work, remote work scenario has changed the use of office space. So the utilization of the office space has come down significantly. A lot of companies have canceled their leases. Sometimes they are reducing their footprint, rather than having 3 floors, now they only have 1 floor. So there is a massive utilization issue happening in the office space, which is kind of dropping the overall occupancy rate. And then because of that, the overall net valuation is also dropping. So next time when they're going to renew their financing with the banks, they're not going to get the same rate, so they may be getting 8% or 9%. B, their valuation is reduced. Now bank will say, okay, maybe we will not give you 80% LTV, we may give you 50% LTV because we don't see a lot of potential in this asset class anymore, and there are so many risks associated with that. So sorry guys, we can only fund you with 50% LTV. So the landlord has to come up with some extra capital to just roll over that debt. So there is a potential risk in terms of how these commercial real estate going to refinance on a go forward basis. So we saw that issue was brewing up in the US, and at the same time the regional banks are the ones who have the largest exposure in the US commercial real estate market. And last year when we saw that some of the regional banks were actually going bust, starting from SVB, then we saw the First Republic, Signature Bank, and we saw Credit Suisse in the Eurozone. And last one, we saw the New York Community Bank. Its stock was going, completely collapse. The bank is still there, but the stock has gone down pretty much like 70-80% on its value. So when we see this, and then in order to protect that, Federal Reserve came out with a program called BTFP last year, Bank Term Funding Program. And the purpose of that program is to basically help those banks out because their assets were being sold very cheaply. So what happens is the banks were losing their liabilities. So the depositors were taking their cash out and putting into the money market funds where they're getting more interest returns. In order to match that outflow, they had to sell their treasuries in the market at a much lower rate. So they were getting a lot of losses. In order to protect that, Federal Reserve came out with this program and say, okay guys, we're going to give you 100 cents on the dollar with these treasuries. So we'll buy these treasuries from you so that you don't have to worry about selling those assets at a cheaper price. But this is a temporary program, right? It was started March 2023. It's going to expire in March 2024, and Federal Reserve announced they're not going to extend that program anymore. So what's going to happen with this program and the banks who are struggling with that, who is going to then protect them? The risk is those banks are going to get bust, especially these smaller regional banks, and they will be merged under the big banks like JP Morgan and Bank of America and Wells Fargo, these type of banks. And if you look at Canadian banks exposure, it's not huge, but still there is some exposure out there. So you can see on average, our Canadian banks have 10% commercial real estate loans on their books. But keep in mind that last year, ECB, the European Central Bank, also warned about a systematic issue with regards to commercial real estate defaults across the globe. So if ECB is warning the entire global financial system about the exposure to commercial real estate, that means it's not regional, it is global. And I can tell you that the banking system, the global monetary system, is very much intertwined like this. Okay, every bank is connected with other bank on the other side of the geography, and that's how all the payments are settled, right? They don't actually move the physical green piece of paper from one bank to the another to settle the transaction. It's all settled digitally, electronically, and they all credit each other in order to settle the transactions. Think about the global banking system. It's a network of many banks across the world, right? So every bank has its account with the other bank, and that's how they settle transactions. So the US banks may have liabilities on the Canadian banks. Likewise, the Canadian banks will have their liabilities on the US bank's balance sheet. Okay. Similarly, the European banks may have their liabilities on Canadian banks and the US bank's balance sheets, and vice versa. Each bank will have their liabilities on the other bank's balance sheet. So they're very much interconnected. So if the banks in one region are going to get crushed because of the bad loans on commercial real estate, it is very likely that that exposure to the other banks are going to impact them as well. So if you look at the Canadian bank's exposure, which is around 10% exposure to commercial real estate in the US and Canada, if those loans are going to get default, then the banks who have the largest exposure are going to get bust, most likely. If those banks go bust, their liabilities might be on Canadian bank's balance sheet or in the European bank's balance sheet. What's going to happen with them? They may have a big hole in the balance sheet as well, right? So this can become a contagion effect across the global financial system, and it can bring the system down as well. That's why the ECB was warning about that. Okay, now how big is this issue? I think it's hard to quantify, but we can see there's a huge problem, especially in the US with regards to commercial real estate. A lot of smaller banks have exposure. Sometimes they have exposure to 60-70%. The big banks don't have that much exposure, like JP Morgan's and Bank of America and Wells Fargo. I think they are less vulnerable compared to the smaller banks. And I think Federal Reserve will not even take care of those banks this time and let them go bust. And all of these smaller banks will go under the big banks. So there will be a massive consolidation. It's going to happen in the US. I think in Canada, it's already very much concentrated by these big six banks. But in the US, we have thousands of regional banks. Those regional banks are basically the backbone of SMB business, where they provide the credit to SMB businesses as well. So those banks are going to get merged into the big ones. Same is going to happen in the European as well. I think the end game of this is consolidation of the banking system under the very few big ones, because the central planners who are going to manage this, for them it's easier to manage with few big banks versus thousands of regional banks across the globe. Now, it's conspiracy theory or whatever you call it, but this is going to eventually happen. And then this will pave the path of the central bank digital currency, which will be controlled across the globe by central planners and central bankers. And that's how they are going to keep the control of the financial system going forward. Anyway, let me know what you think about that. If you like this video, give me a thumbs up, subscribe to the channel, and I'll see you in my next video. Bye.